What's up, legends? Welcome back. I'm in a good mood today. You know why? Because it looks like we finally have some normality back in the price action. Now, sure, that normality is to the downside, but that's okay. At least we are starting to have trends that we can identify a little bit better than what we kind of went through last week. So in today's video, I'm going to go over the play that we talked about yesterday and follow up on that. And then also into what I think might happen next and why I think we're continuing to drop right now, and hopefully give you some valuable information to take away with you into the weekend. So if you're new here, welcome. If you're returning, welcome back. As always, please be sure to hit that like, subscribe button and also leave a comment down below. We are in a bear market, very, very difficult for crypto YouTubers to grow their channels in a bear market. Although I have to say, I am very appreciative and grateful of those that are sticking around, that are enabling me to continue to grow as a very small creator on YouTube. So big thank you to everyone who does take the time to hit that like button, to everyone who subscribes, and to everyone who shares my content and comments around. Now, let's very briefly go over what we were talking about yesterday. If you didn't check it out, you can check out the video in full from yesterday, but a brief rundown on the 15-minute time frame. We were talking about these three hits to the high that I have circled here and an M formation to follow. This video was recorded before the right side of the M formation had formed, and we were talking about how session characteristics have changed recently, in that the Asia session seems to be running a slow trend, and we worked out why. So I won't go into details about that, but be sure to check out yesterday's video if you want more information on that. The point being, the reason I bring it up is because it looks like we had a continuation of that yesterday. This green area here is the Asian session. So it looks like they did continue to run a trend. Now, the other thing about this was right here on this candle here that opened at 8:30, it closed at 8:45, printed as an inverted hammer M formation. That is actually a Brinks trade. On the wrong session, however, usually we get them on US and UK. However, because we've identified that Asia was running the trend and that the session characteristics have actually changed, I would say that this is a valid Brinks trade right here. A Brinks trade has a high probability of playing out through 3-level drops. And so that's what we want to look into today, to see if we've already had the 3-level drops or is there more to go. Before I get into that, let's just take a look at the 1 hour time frame. Yesterday, the EMAs, the 50 there and the 200 were getting tighter together, and between these levels, for a higher time frame trade, you don't really want to be trading between these two EMAs, especially when the EMAs are going sideways. As I mentioned on that video, we needed to pick a direction and we ended up doing exactly that. So we broke down. This here was the retest of the 50 EMA. So if you were trading higher time frames only, being a 1 hour, which is not really a higher time frame, but it's higher than 15 minute. If you're trading the 1 hour time frame, there was a short entry here when we broke the 50 EMA and then came back to retest it. So regardless of the time frame that you're trading, the setup was pretty easy yesterday in comparison to what we've seen over the last week. Therefore, hence my earlier comment, it looks like we're getting some normality back. Now, staying on the higher time frame, where are we going in this drop? It does look like to me that at the least, we should come back to test around this low here. Now, I'm not saying we're going to get all the way back down there. It depends on what the market maker's plan is right now. Because if the market maker wants price to continue up, then it's likely that they won't want to recover this entire candle. This candle here is the market maker candle. If we bring up the volume, you can see there that the volume spike happened on this candle right here. So if the market maker doesn't want lower price, it's likely that above this candle is going to be the lowest that we go today. If the market maker starts to move price into this candle and closes more than 50% of it, then the market maker is probably favoring lower prices. So this is the level that we need to watch for now. This becomes our area of interest. These levels here that I've marked as Binance longs, they were from yesterday. And what I mentioned to you was that if we did get that M formation breakdown, there was going to be a battle at $30,000 area, which we needed to expect. And we can see here in this consolidation over a number of hours, we did have that battle at the 30K, but eventually we broke it. So the bears won in that situation. The next level was a return to this wick here that was formed when Powell did his speech. And you can see again that price did return to that wick. So the bears won in that situation as well. Finally, we had these ones. Now I'm going to recheck the heat maps in a second to see where the actual buyers are. But for now, we've broken all of the buy levels that were in the order books from yesterday. And we've also broken the previous day's low of the day. So I'm just going to reassess this low of the day now. Now, as I'm filming this, we've got 10 minutes until this candle closes, and this candle will create the new low of the day. So I'm going to leave that for now. But I think in the next 10 minutes, it's pretty likely that we won't come up to create a new high of the day, although you never know. So we'll put the high of the day in here right now, and I'll come back before the end of this video to redo the new low of the day. So whilst we're waiting for this candle to finish, let's have a look at high block and see what's going on here. We still really don't have a lot of leverage in the market, although one thing we can see is that the delta has switched to the shorts, which is good, and the shorts is growing down here too. We're at 5 billion, so we're slowly starting to build trust in the way that retail traders are feeling like they can pick the direction, right? So therefore, it doesn't matter if price is going up or price is going down. They just want to feel confident that they're on the right side of the trade, even though they may not be. So when we head in an actual trend, when price stays under key EMAs and things like that, even if price is bearish, retail traders might be willing to play. It's when price is erratic, up, down like this, after a shakeout, that retail says, nah, I'm sitting out and waiting. And we can see that in all these white gaps in between the previous price action and even above current price action and below until we just made this move down now, that people were risk off for the last week. So what the market maker is doing right now is trying to build the trust again by giving you a fairly easy trend to get you to want to play the game again. And that's fine. Whilst the trend is there, we trade the trend. So we've established that the market maker is currently trying to induce retail to open short positions. Let's have a look at trading light now. Now, don't forget, if you are interested in getting any of these programs, there are discounts and bonuses if you use the links down below. So it does make it cheaper to use the links down below, as well as Binance and OKX if you're looking for an exchange to trade on. If you're an Aussie like me and you want to trade leverage, I trade on OKX because not only does it allow me to leverage trade, but once this market turns and we go back into a bull market, I'll be able to trade on leverage altcoins that settle in the altcoin itself, which I'll get into more when we're actually in a bull market. But for now, you want to get used to the exchange so that you're not learning it at the time. Now, we can see here currently below price, there are a lot of buys between 28,550 and about 28,350. That 924 is a big number at 28,350. However, there are many levels price would have to break before it has a chance of getting there. Also, as I'm filming this, we are right before a new session open, and sometimes orders disappear on a new session open, so you need to come back to have a look at it. Down here is another level which we have previously wicked to before. This one's sitting at 600. I would call this a lucky dip buy. This is people who are entering low long positions in hopes that price wicks back there again. It's not at this stage, it's not a guarantee that we're going to go back to 26,700 because we'd have to break all of these levels before there's even a chance of that happening. So we want to be aware that people are willing to buy down here, but it's not where we would make our own trading decision at this point in the price action. The key level that we really want to watch is between this 28.3 to 28.5. Now, we also have in the current candle at the top top of the candle, there are bears pushing price down. What that signals to me is that it is likely that these bears are trying to push price down into these buy areas. So that's when you start to see momentum increase in the candle, which is what we can see in this current candle. This isn't an area that I mark out. It's just something I want to be aware of to give me confidence that we probably will come down into these buy zones. Above price, however, it doesn't look like we really have too many people waiting to further short Bitcoin, at least until we're back at around 30,000 kind of area. Considering how far we are from price, that's not really a big concern for me right now, but we'll mark it out anyway. So now when we see those levels on the chart, you can see that the sell zone is just set at the previous high of yesterday's session. The buy zone currently is interesting to me because it does prove that currently the interest is in holding price above this candle of interest that we marked out earlier. So if we can get a bounce here, that's potentially going to be a higher time frame W formation. The higher time frame W formation that I'm talking about would be this one right here. So if price were to do something like that, and look, because we're on a higher time frame, this could potentially take the whole weekend to happen. But if we were to get something like that, then I think we would be fairly confident that for at least the short term, we have found the bottom and the market maker does not necessarily want to take price lower. So that's one thing to watch for. On the lower time frame, from the M formation that we identified yesterday, this whole range here would be the drop level 1. This whole range here would be drop level 2. And this whole range here would be the drop level 3. So what's going to be really interesting right now is to see if Asia is still running the trend and actually reverses price today. What I would be watching for on the 15-minute time frame is to see if we start to get a W formation. It may not come all the way down to that buy zone because that buy zone is just acting as the low of the day for now. So just be aware of that. But over a session change, if we start to get a W formation, you may get a short-term uptrend. However, remembering that yesterday's move down from the M formation was already the midweek reversal because the beginning of the week was an uptrend. So we had this uptrend start of the week. We had the 3 hits to the high. We had the M formation reversal. We may potentially have had the 3 level drop after that. So the whole week's actual normal cycle has already played out, which means we are looking at a total reset, but a total reset into a weekend is really quite dangerous because you will get jammed into the weekend trap. If anything, if you do find a W formation on a lower time frame today, I would only take it as a slow trend trade, meaning a 6-hour period over one session. All right, the new daily candle has opened, so I've now fixed up that low of the day. It's now sitting at 28,630. So for me personally, I am holding on to my short trade from the one we identified yesterday. I'm going to wait and see how long we hang out at this low of the day. If we start to change the market structure within the Asian session, I'll take my profits. So if you didn't catch the short from yesterday, if you didn't catch the 50 EMA retest after that either, then what you'd be waiting for right now is to see if price does come back down somewhere into this buy zone and actually stay above that previous candle on the higher time frame, so above around 28,150. If we can hold there and then start to change market structure, then we may get some relief, but just be wary that we are heading into the weekend and any trades that you open that you cannot close today or at the very latest tomorrow afternoon have the potential to lead you into a weekend trap. If anything, the only trades I would be looking to take for today and tomorrow is going to be the 6 to 8 hour slow trend. So if you can identify that, then you can be in and out within a day and you won't get jammed into the weekend. Now, I want to quickly take a look at ETH because ETH is in a very interesting position. When we did have the big sell-off last week, ETH wicked right out of its previous market maker candle from the 21st of July. And it was actually looking to be in a much better position than Bitcoin was because it also held above the 800 EMA. It does not look so great today on a higher time frame. What has happened here is a H formation, which basically looks like this. So you have a big sell off down, you have an attempted recovery, then you have the second attempt into into where the first week went. It looks like that's what we're doing now. The aftermath of this type of a pattern goes like this. Best case scenario, it just comes back to recover that week, and then it goes sideways for a bit, and then it starts to change market structure and gives you a W formation out, and we have a change of trend. So if it comes back into here and settles, there will be nothing to do, because this is on a daily time frame. So there will be nothing to do for a number of days. And what you'll be waiting for is this W formation to give you a hint that they don't want price lower than this. That's best case scenario. Worst case scenario is they do favor lower prices, and we come down to close out this whole week. We drop that level. We retest it, which will also retest the 800 EMA. If that happens, we are terribly bearish. Even though we're already terribly bearish now, I understand. Everybody always says to me, we're already bearish. I get it. I mean, a continuation of being bearish. Now, if that second scenario happens, what levels do we have for targets? This area here is the last area that the bulls tried to put up a bit of a fight. After we had a sell-off from an uptrend, the bulls came back in here and took back over. So we would expect price to return to that level should we break it again. And that's putting Ethereum 1300 to around 1550. So once we get back into this zone on a smaller time frame and we get closer into that wick, we want to see if that volume is going to increase. And if momentum picks up. If momentum doesn't pick up, then we might get this scenario where it just goes sideways. So on the 4 hour, we can see that this part here might be in the midst of happening. So we had the first sell off. This consolidation that I marked out is this consolidation here. If we can get back up and continue to do that for a little bit longer, then we will be looking for the market structure change. Currently, where price is right now, it's only recovered the candle closes of the 4 hour time frame, which is so far a positive, but there's still more to do. What that means, if it's only recovered the candle closes, what that means is that everybody who opened a short position on these wicks down here, the market maker is trying to keep them trapped. So far a positive sign for a potential change in trend, but you still need that W formation to happen from here to confirm it. So I wouldn't be jumping ahead into anything right now. On a 4 hour time frame, this right here could be the W. So I would be waiting for a 4 hour hammer or a bullish engulfing close to get some confidence that this may actually head up from this point on. All right, guys, those are my thoughts of the day. I am feeling positive about price action, but we may hit a little bit lower before we actually start to reverse. So just keep an eye out for that. If you enjoyed this video, like, subscribe, comment, you know what to do. Have the most amazing day. Have the most amazing weekend. I'll see you guys next week.